Good afternoon and welcome to the Japan Society's regular webinar on current affairs and business. I am Bill Emmott, and as many of you know, I have the honor and pleasure of chairing the Japan Society. Climate and sustainability have been topics that have regularly featured in our webinars, either directly, as in our discussion on January the 20th on the path to net carbon zero with Adair Turner and Naoko Ishii, or indirectly, as in discussions over US-Japan and US-China relations directly, or of course when we addressed the pandemic's impact on energy almost 1 year ago, last June, with Jun Arima and Nick Butler. One characteristic of discussions of climate and sustainability, however, is that they often focus more on goals and needs than on actions and tools, as agendas are set by governmental pledges rather than by markets and businesses. Yet, if the goals are to be achieved, pledges need to be turned into plans and tools, and much of the actual action will need to be done by markets, companies, and individuals. Which brings us to today's discussion on green finance. Financial institutions and markets are where a lot of that action has to happen, or at least be intermediated. But what is green finance? And what marks it out from conventional finance? In Britain, we now have the Green Finance Institute, which, as many of you know, one of our speakers chairs. So I will quote from its chief executive, Rhian Marie Thomas. She wrote, "The systemic risk posed by the climate crisis to financial services requires decisive action and a rapid pivot towards the opportunities presented by the zero carbon economy. Box ticking, sloganeering, greenwashing, and relying on the heroic efforts of individuals won't achieve the scale of the transformation required. Cross-sector collaboration and the focused application of the creativity, innovation, and skills of the financial services industry to finance the global transition will, in other words, achieve that scale of transformation." After that quote, I'm tempted to simply add the exam question word, discuss, for this frames the issues perfectly for today. Tokyo and London are both now, and in the coming decades will be even more, major financial centers handling this task. So where have London and Tokyo got to in the move from box ticking to focused application? What skills and collaboration are being applied? What are the drivers of this transformation in finance, and what obstacles is it encountering? To discuss those questions, we welcome today two people who are deeply involved in green finance. In Tokyo, we welcome Dr. Mari Yoshitaka, who is Principal Sustainability Strategist at Mitsubishi UFJ Research and Consulting Limited. Mari is a member of the World Economic Forum Global Future Council on Japan, of the Cabinet Secretariat's Expert Panel on Climate Change, and the Financial Services Agency's Expert Panel on Sustainable Finance. And in London, we welcome our Japan Society member, Sir Roger Gifford, who is chair of the aforementioned Green Finance Institute, is a senior banker at Skandinaviska Enskilda Bank, which he joined in 1982 and led in Japan for 6 years in the 1990s. And he was Lord Mayor of London in 2013. He too has been very involved in government advice on green issues, including the Green Finance Task Force in 2018 and the Dasgupta Review on the Economics of Biodiversity Loss in 2019 to 21. As Britain is hosting both the G7 in June and the UN COP26 climate conference in November, it seems appropriate to start this week in London. So I will now ask Sir Roger Gifford to kick us off. Roger, over to you.
Well, thank you very much, Bill, and hello, ladies and gentlemen, and welcome to the most exciting new development in the finance markets. And I can honestly say that not only from experience of banking, because it is consuming very much what bankers and investors are currently talking about and currently doing to design new products, both for infrastructure development and in terms of how they manage their whole credit and banking needs. The first infrastructure green bond was issued some 12 years ago. And since then, the idea that money needs to have a defined purpose and what that purpose can be put to has only grown and grown. And Mari, I know we'll talk about the role of finance for client countries and businesses to succeed in achieving their decarbonisation goals, mostly declared for 2030, and discuss the main policies, the structural changes, or the behavioural changes needed and or likely during this decade in Japan. Many of these reflect what is happening in many sophisticated economies. So after some comments about Europe and the UK, I'd like to talk about ESG and some of the recent developments there. The huge focus that we have on climate change is becoming more and more urgent. And this year, not least here in the UK, with the great climate conference, this COP26, the conference of parties as it's called, on climate change, the COP, hopes to see real ambition, real action taken. A cynic would say, we'd like to see it as big as Paris, but let's see what actually happens in practice. The COP has taken on an extra meaning for the UK, of course, because it is an enormous expectation around what can be achieved, what can be got out of this, what real practical actions can be taken as a result of an enormous amount of rhetoric, an enormous amount of aspiration to see it happen. There's also the G7 being held later in the spring, where the agenda will have climate as a major element, not least around new forms of energy, around coal, and around coal and indeed all the other forms of infrastructure energy we want to see to develop in the renewable space. And indeed, I think finance has a real role to play in hastening change through infrastructure investment, through carbon measurement and investing in new tech. And investing in new tech is the key to seeing the changes that we want to come. A key part of the story, because by its investment, we will see solutions coming forwards. In fact, I know we're not necessarily coming onto nuclear power as something that is a major headline here, but nuclear power represents a failure of 20th century of society to find a solution to renewables back 30 years ago, when actually what we all needed was nuclear power in order to make that seminal difference to what we wanted to happen, replacing the old coal power. Since then, fossil fuel, has effectively doubled in size since about 1980s, 1990s. Nuclear power would have solved that if we had made the investment that we are now beginning to see in investables and renewables. And I would say that the green market is in burgeoning shape in both London and Tokyo. And I would say that it has a real role to play in helping countries meet climate targets. The key to green finance is that it does what it says on the tin. It finances climate-reducing, environmentally beneficial investments, and investors want that. They want it in its trillions, so they say, and investors ultimately are a solution. If we don't have investors, the projects we're making, including banks, from a kind of financing point of view, then it won't happen. And this is related very much to the whole area of ESG, where ESG, which is environmental, social, governance, are represented the three pillars of good governance in a company: sustainability, which I'll come on to in quite a way in a moment, and environmental improvement in society. These three are represent what the modern investor wants to see and hopes to see in the investments that they are making. And a whole alphabet soup of acronyms and leadership movements and have arisen around this particular subject. We could talk about it for hours and hours, because ESG has become, if you like, the defining metric that people want to see in much of what they do. You can ask about whether it's moving fast enough to meet the perceived urgency that people, governments and investors want to see. And the answer is yes and no. Its development is much quicker, I would say, here in the West, including Japan and the UK, less so in China, not so in India. and many other emerging economies. China itself has been espousing the concept of ESG and green finance for many years. And you have to be cynical and say, why is that? And in fact, the commercial opportunities that have been there for China especially have been absolutely staggering. Look at the development of solar panels, solar voltaics that's happened in that country in the last 15 to 20 years. And you see why green finance has been such a positive and commercially viable aspect for China. In this respect, the United States is following up hard, but there's a huge difference between India, China, and the US and the West in their approaches to this. So behind every great story, there's bound to be a bit of commerce coming in, and I think that's not to be forgotten in terms of where we are now seeing green finance develop. China has been extraordinarily powerful in its espousal of green finance. And I think you have to say there's a strong commercial element behind that too. Then I want to talk briefly about biodiversity loss, which I mentioned that it is now a major concern to corporates and investors, increasingly so. And I was privileged to sit on the Dasgupta review of the economics of biodiversity loss earlier this year. When you hear of the phrase asset management, you think of a financier walking around moving sums of money. Actually, we're all asset managers. All individuals, households, communities, and institutions manage assets, whether they're produced, they're human, or they're natural capital, in line with their motivations. Each of us should aspire to manage those assets to achieve a portfolio that's best under the circumstances for our own individual needs and desires. But humanity is failing to manage its global portfolio of assets efficiently. We are continually depleting our natural capital, ecosystems like estuaries, forests, mangroves, and in some cases to the point of collapse. The biodiversity that makes them productive, resilient assets. Estimates show that between 1994 and 2014, produced capital per head increased by about 13% globally, many, many times the rate of inflation. But the value of the stock of natural capital per head declined by nearly 40%. These numbers can be argued with, but they're roughly right. In a world where the healthy biosphere could choose to draw down its natural capital and use ecosystem services to accumulate, produce capital and build up human capital, exactly the other way around. And that is what economic development has come to mean amongst most economists. But that view and the practices it encourages has meant that in recent decades, humanity's demands have come to vastly outstrip nature's supply. It is the definition of unsustainable behavior. And since much of the biosphere is open to all at no monetary charge, nature's worth to society is not reflected in market prices. Governments almost everywhere exacerbate the problem by paying people to exploit the biosphere, whether it's fish or copper. And the three pervasive natures of feature, mobility, silence, and invisibility, those three main natural, I don't know what you call them, that they are what represent nature most. Mobility, silence, invisibility. It means it's virtually impossible for markets to record the use that we make of nature, to measure it, making it hard for anyone to trace the adverse effects of our actions. So this is therefore not just market failure, but a global, societal, institutional failure. It's a global failure, which of course we've not really had to stand up to before. And changing how we think about and how we apply economics to recognize that our economies are embedded within nature, not external to it, allows us to acknowledge the limits that nature places on the economy and to understand what truly constitutes sustainable economic development and prosperity. This is an area we will be focusing a lot on in the years to come, much more complex than climate. Climate is one key part of it, as it's more difficult to measure than climate, but possibly even more important than it. Bill, I focused a little bit on biodiversity loss because climate is part of our biosphere. And I believe it is the next great barrier for the solution to the issues that we have. And many of the lessons that we're learning in climate will be translated into solutions to how we tackle biodiversity loss. I think I'll stop there. Thank you very much.
Thank you very much, Roger. That's been a very good overview and framing of the issue. I think in the discussion we will poke further into the role of commerce and the role of and the interplay between government and commerce in particular in, as you say, dealing with topics that are very often not naturally reflected in market prices as externalities as they are. Now we'll go to Mari Yoshitaka in Tokyo to tell us how things look from Tokyo as a financial center.
Thank you, Bill. Thank you, Sir Roger, for your presentation. First of all, really appreciate for giving me the opportunity of speaking at Japan Society's webinar with Sir Roger today. Actually, for me, the Sir Roger is like a walking dictionary of green finance. I admire the Skandinaviska Banken with the World Bank issued the first green bond all over the world. And I saw impressed that kind of action to be taken by the private banks and the World Bank. So then G7 and the COP26 will be held chaired by UK. So Japanese audience today, including myself, is so keen to know how the UK government takes such a leadership for not only the climate policy, but also in green finance. So now I'm serving at the Mitsubishi UFJ Bank and the Mitsubishi UFJ Morgan Stanley Securities. So both securities and bank to promote sustainable finance business from last year. Before that, I have been involved in climate finance and the emission trading business for over 20 years and watched all the trend of the development of green finance markets in Japan. So I explain the current situation of green finance in Japan and then tell my perspective for COP26 as the opening briefly. So now the situation in Japan has rapidly changed last half a year. So as you know, Prime Minister Suga declared that Japan commits to achieve net zero emission by 2050 in October last year. And he also mentioned that create the virtuous cycle of economy and the environment. To this also, green growth strategy was laid out by the Ministry of Economy, Trade and Industry, METI. So the strategy sets an action plan for 14 priority areas, such as hydrogen as a source of energy, as well as installing up to 45 gigawatts of offshore wind power by 2040. So to promote introduction of offshore wind power generation, actually in Japan, it's only couple of offshore wind power is installed. Now the Ministry of Land Infrastructure, Transport and Tourism designated 4 ports as base port last year. But yesterday, they have revealed to plan to expand the scale of the base port and land designation. So it's, you can see that how our government enthusiastic about to promote the offshore wind power generation. And as you know, Japan has a position to rely on the fossil power generation as a base load power source and the best mix of the energy source of the National Energy Basic Plan. So the government will revise the global warming countermeasures plan and in the plan, the maximum introduction of renewable energy would be mentioned. Then the basic energy mix plan has also been reviewed now, and then the both plan must be consistent. So this year it's very, different way of review that the both plans. Normally the government fix that the energy mix first, then they develop that global warming countermeasure plan. But this year it's opposite. So Japan's climate commitment has prompted effort in various areas, including the establishment of market development task forces for technology innovation and green finance. Now, green investment is a top policy priority to help revitalize the economic from the COVID-19 pandemic. So Financial Services Agency, FSA in Japan, established the expert panel on sustainable finance, comprised of the business, financial, and academic experts. So as Bill mentioned, that I am a member, one of the members. So now we have done so many hearings and interviews from all the stakeholders in Japan, such as the banks, asset owners, asset managers, insurance, and also industries. So FSA will issue a comprehensive report in June, corresponding to the objectives of driving sustainable finance, to support client companies through investment in finance for sustainability. Then promoting the transition to the carbon neutral society and disclosure of climate related information are also the main objective of this report. So then regarding ESG investment in Japan, since GPIF, Government Pension Investment Fund, signed PRI, the Principles for Responsible Investment in 2015, the awareness of ESG investment has spread rapidly. The green bond issuance will likely rise to a new record this year, with over 10 billion US dollars. It's more. So especially since the Prime Minister's announcement of net zero emission by 2050, the nation's issuance of green debt significantly increased in the fourth quarter of 2020. So I believe that the report issued by the FSA will help to expand this market in Japan. Then the COP26. So as you know, that the main agenda of COP26 is to grade up of NDC, National Determination Commitment, and Article 6, the rulemaking of the market mechanism, and climate finance. These are all three main issues to be discussed in COP26. So at the climate summit hosted by US President Mr. Biden in April, Prime Minister Suga announced a goal of reducing Japan's emission by 46% in 2030 from its levels in 2013, which used to be actually the previous target of 26% reduction in 2000 compared to 2013. So it means that 20% of the reduction target is, goes up. So it's so challenging for us. So I believe that Japan would declare this pledge as our NDC toward the COP26. I don't know its timing, G7 or COP26, but maybe before that. So it is expected that the establishment of the market mechanism that can use the emission reductions and realize the overseas to achieve the reduction target of each country. This decision will trigger the official start of international cooperation. Actually, for Japan, it's meaningful because Japan's proposed that joint crediting mechanism. And this is a kind of international cooperation with the developing countries to use that carbon reduction technology to transform their society. So I have heard that the Minister of Environment, Koizumi, would facilitate the negotiation of market mechanism at the COP26. So I think it would be epoch-making for transitioning the world for carbon neutrality if it makes it through. Then another topic is climate finance. At the Japan-US summit meeting, actually the US and Japan, they launched Japan-US climate partnership on ambition, decarbonization, and clean energy. And it has joined force in the climate partnership to accelerate the transition in Indo-Pacific countries, including cooperation on the mobilizing additional public and private sector finance for the net to zero transition, climate resilience, and disaster risks. So I think this partnership would be emphasized at the COP. So I know Japan and the UK have economic partnership agreement and other collaborations. Maybe in a such a climate change issues, we can make some collaboration together. Thank you.
Thank you very much, Mari. That gave us a very good sense of the, particularly of the drive and the urgency in Japan and the way in which the pledges made by Prime Minister Suga have changed the environment for green finance and for business generally. Now we've got questions coming in, and I would urge and encourage, welcome questions from the audience about any issue, but I'm going to start by asking about ESG investment and about this issue to both of you. And I know there are some questions coming in on ESG, but I suppose really my question is, how powerful is the ESG movement and the ESG principle in investing today? And how genuine is it? I mean, these issues tend to produce some mixture of enthusiasm and cynicism or skepticism. And I'm wondering if you can help us evaluate ESG. As Mari said, the adoption of this by the GPIF was an enormous stamp of approval for ESG. But how powerful a movement is it really? What difference is it really making? Maybe I'll start in Tokyo for you to carry on, Mari, and then ask Roger to talk about it.
Okay, thank you, Bill. Thank you for the question. Actually, that as I mentioned that, our starting point of the ESG investment in 2015. Before that, actually, as you may know that the main the finance sources for Japanese industry is the indirect finance, like banks and loans. And before that, actually, before the GPIF signed the PRI, the relationship between the banks and Japanese industry is very strong. So we do not have much, have a dialogue with the capital market. And it suddenly happened in Japan. Then now Japanese government set forth, stewardship code and the corporate governance code in 2015. And then now that the government actually will revise it's a third time of the corporate governance revision in June, actually. Then, in fact, it's still ongoing. And I don't think that the asset owners or asset managers in general in Japan completely understand what's the ESG investment. And they're still running. Actually, why I work for the Mitsubishi UFJ Morgan Stanley, because I'm invited by the asset manager at what's going on in the climate risks and what's going on, the environment issues and so on, so on. So that's the, current situation in Japan.
Thank you, Roger. Tell us why we should believe in ESG and not think it's greenwashing as your chief executive.
Well, ESG goes back way, way further than that, Bill. This is a movement that's been gathering pace, I would say, for 20 years. It's gone through the Smugglery Act, the Bribery Act, it's gone through internal CSR policies, it's gone through diversity and inclusion policies, and the ESG is a result of a whole host of internal corporate and financial institutional movements, I would say, to bring together what do we mean by good behavior by a corporate. And frankly, it's a useful acronym. It's not the best acronym there is out there, but it's a useful acronym. And it has become to symbolize or to encapsulate what companies want to show that they are doing. They have a good ESG policy. This is then developed into if you like, into a set of ideas that companies say they want to embrace in order to show that they are good, better companies. All of this goes back to the financial crisis for me back in 2008, when the state of the financial markets was seen to be pretty poor, that behavior in finance and in banking was reprobate, that there was a lot to be improved in the whole way that the financial markets were behaving. You can see strands of ESG going back to that. But it has come to mean how do companies behave? How do banks, how do we all behave in our companies? Are we there just to make money? Does money have no purpose other than to create more money? Or has it actually got a purpose in the company? And this is worthy of a long and interesting session at the Japan session, at the Japan Society in due course. It has now though developed into something of a grouping whereby companies will say, yes, we have good ESG, or we are here on the ESG, or we want to make ESG investments in order to show that they are both box ticking, yes, let's talk about greenwashing, but also that they are on that path of being better companies that are more worthy of investors. And I think the one thing that comes through so clearly in all that we're discussing is the importance of the investor. Whether it's green finance, whether it's biodiversity, if the investor doesn't want to buy it, there's no point to it. And the investor's demands around ESG are only getting stronger. You need to look at the UNPRI, the United Nations Principles of Responsible Investment, which make a lot out of ESG. The UNPRI are not effectively the same as ESG, but they are very close to it, very close to very close to making it the kind of the mantra which they wish to see develop in corporates.
And following on from that, but both of you, Neil Riley has asked a question. He's a Japan Society board director, but also working now at Mizuho, previously at Barclays on the Japan desk. He says, do the panelists have any views on the future prospects of corporate ESG rating services provided by third-party ESG advisory firms? Will there be increased usage and prevalence as happened with credit ratings, or will companies focus on their own internal key performance indicators as targets to connect to sustainability-linked financial instruments? The ESG rating business.
Both and.
Yes.
Yes, they are very useful for corporate to start measuring its own internal behavior. Are they perfect? No, they're not. And they need work on, for sure. I think a lot of ESG internal ratings are useful. I think they can be very well supplemented by metrics around individual items like green, like biodiversity, but they aren't perfect, not yet.
Mari, how do you see them in Tokyo, ESG ratings?
Well, normally that the asset manager, asset owners use the ESG rating from overseas, not the Japanese original rating agency. But recently, Nikkei Quick or other RI responsible rating agency started the ESG rating. So it's start developing now. Yeah. That's why that I cannot say that it's useful. No, it's just starting.
And do you?
But having said that, I think they're pretty good on the whole, and there are many agencies which are judging ESG ratings and making judgments about them, and I think they are getting more sophisticated every year. Don't forget, this whole ESG discussion only really took off about 5 or 6 years ago. So there's a long way to go in developing the art and technique of ESG ratings. And in another 5 years, I think we'll look back and think, wow, this is a different ballgame.
Yeah.
And
from where we were.
And do you think that it's really driving corporate behavior? Is the key question. I mean, is it? Yeah. Can you actually?
Actually, in Japan, actually that I also advise or consult with top management of the listed company in Japan regarding the ESG investment, and they are very concerned about rating. And then they always ask me that how to grade up to their rating. So they are very concerned. Yes.
And yes, it is making a difference. It really is making a difference. It's taking time, but it's making a difference simply because of the increased accountability and transparency that is going into a lot of the measurements that are being made.
Thank you. Now, let me raise a question that Andrew Fraser, advisor at Mitsubishi Corporation, has raised in connection with, but not directly about, nuclear power. He says, Sir Roger regrets the failure to build more nuclear to replace coal power. Andrew says this resulted largely from the failure to find a funding mechanism satisfying both governments and business. So his question is, are we now ready to find more creative solutions for long-term projects, taking account of natural capital that you very much cited, Roger? And he goes on, Andrew is an old advertising man, a medicine madman. Are we ready to pay the price? A great ad man, Bill Bernbach, once opined that a principle is not a principle until it costs you money. How is it going to work with natural capital better than nuclear power is the question.
Well, this is the question, Bill, that you said wouldn't get asked before we started the session. I speak a little bit from ignorance, of course, Neil, and forgive me for that. But my feeling is that we grew like crazy, topsy-turvy, throughout the 80s and 90s in a way which was simply about adding growth to the world economy through China, through other countries, very much through India, through our use of coal and indeed other fossil fuels around the world. My feeling is that if we'd been as ambitious with fossil fuels, with the defense to fossil fuels, as we have been with fossil fuels themselves, we would have found more solutions. And those solutions would have cost us money, yes. And we didn't look for them, we didn't find them. And we tried, I suppose, as a society, we tried to find the answers through nuclear in particular. We made attempts at renewables. We made attempts at all sorts of interesting new technologies that were coming forward, not least the beginning of photovoltaics, wind farms, carbon capture. But we didn't, to be honest, as a society, try hard enough. And we never managed to solve that issue of replacing what was the clear technical failure of nuclear with other forms of power. Now that, Neil, is easy to say who knows if we would ever find a really viable, technical, cost, vaguely efficient solution. But to me, we should have tried much harder as a society to do that. So it's now almost, it's not too late, but it's typical human nature that we find ourselves where we are.
So thank you, Mari Yoshitaka. So perhaps the connecting question is really about carbon pricing and an emissions trading system in Japan. Mark Partington has asked, will Japan adopt an emissions trading system like the EU ETS? I would connect to that. Will carbon pricing and carbon tax really become an important part of government policy and therefore an important part of financial calculus in Japan?
Yes, as you may know that now the carbon pricing is one of the major policies to be considered. And METI and the Ministry of Environment actually discussed what kind of a carbon pricing must be introduced in the nature, because Prime Minister Suga assigned that both ministers to develop the carbon pricing in Japan. Then, but so far that it's still discussing, and they have not discussed about to introduce the emission trading system. And we have already have a carbon tax, but it's what's the discussion point is that the level of that carbon tax. So I think that actually, I don't think that the emission trading system will be introduced in Japan soon. Now, the METI is more interested in carbon credit, which is a project-based carbon units to make a transition of the Japanese society to the carbon neutrality, and that's why I mentioned that carbon credit is still keen in Japanese industry to make a transition of carbon neutrality. So that's the situation now. But in fact, that many of the companies now in Japan introduced the internal carbon pricing to be evaluated by the financiers to include the carbon risks and the carbon risks and business opportunities. So Hitachi or Impex and some of the companies now, Sumitomo Chemicals, they already introduced the internal carbon pricing to make a decision for their investment when for that their investment. Yes.
Now, I think, that reminds me to ask you, I think I read that Mitsubishi UFJ itself yesterday or the day before announced a target of a net zero asset position by 2050. Now, that's a long time ahead, but what does this mean in a company, in a financial institution like Mitsubishi UFJ? I'm sure they're asking your advice for how to achieve this.
Yeah, that's actually, it's a part of it in reply and respond to the ESG investors, I think. So as you mentioned that now we announced that the carbon neutrality to commitment net zero emission by the 2050, but also that we committed that net zero by 2030. So this decision is made because of the Prime Minister Suga mentioned about the target by 2030. That's the reason. So now MSU will also establish the fund to stimulate the renewable energy market and develop first scheme in Japan to deal with the one-stop solution from generation to purchase for green power. This actually decision is replied to the TCFD financial disclosure. So TCFD disclosure is very, very important for the Japanese industry now. And it's a great engine, great driver to promote that, encourage the information disclosure for ESG investor.
Thank you. That's very interesting. And I'm going to ask a question that I think probably for Roger, but either of you, which is a question from Claire Weaver, who's another board member, a lawyer, but she has mentioned, as soon as the word blockchain appears in a question, I realize that I don't understand the question. So I'm going to read it out because I know that you both will understand this, and I think it's probably important. Do either of the speakers see any opportunity for the use of the blockchain stroke DLT for issuance of green bonds or ETS trading? Is this digital licensing or digital system going to make a difference in green bonds and ETS trading? Roger, what is that relevant?
I think Claire, my quick answer would be no, simply because the green bond market is still tiny by comparison with the overall bond market. We're talking about reaching for $1 trillion, which is fantastic by comparison with where it was, but it's still a relatively small part of the tens and tens of trillions that are outstanding in the normal in the normal bond market. However, maybe behind your question is the very interesting point about gathering of information, of collecting information, and of collecting that database, which we would like to see much more prevalent, much more available on a number of different green and I would say even more interesting biodiversity parameters, which are increasingly coming forward. So I think it's a very interesting area to watch. I think in the near term, we're going to have problems putting enough metrics around the biodiversity part, or possibly the green part, that come up in those instruments, and which blockchain could be very useful for. I mentioned earlier the complexity of biodiversity versus the complexity of climate. It all comes down to what metrics you can measure. The green bond market has grown terrifically because we have a carbon metric to measure every bond, every environmental bond that comes. We can say this is taking the carbon content or the environmental aspect of this particular loan down by so much percent. It's clearly good for the environment because of X, Y, Z. Blockchain could be, or some of the mechanisms that are there for gathering information in blockchain could be a way of gathering the 20 different aspects of biodiversity which are needed in order to make what you could call a more effective biodiversity bond. You have everything from water, you have water, forestry, you have land degradation, you have agricultural products, of which there are at least 20, 30 important agricultural products to monitor. And it may well be that the blockchain could be used for gathering information on those and making comparisons, which would then be very useful to Nestle, to Unilever, to Cargill, to Trafigura, all the really big food users. We haven't reached that level of sophistication yet, but I think it's very well worth watching. So thank you, Claire.
Thank you. Now, a similarly kind of detailed question for Mari Yoshitaka. And this question is from John Howland Jackson, who runs Nikko Asset Management here in the UK. And his question is, does Yoshitaka-san envisage the introduction of any form of ESG regulatory reporting requirement on the asset management industry in Japan along the lines of the EU SFDR as part of the revised corporate governance or stewardship code? This tends to be the quickest way to focus the mind of enormous investment institutions. So do you think that there will be a formalized ESG regulatory reporting requirement in Japan for the asset management industry?
Gosh, John, I'm very glad you asked Marie that question.
Actually, for the asset managers, for now, they don't have any, such a regulatory forms so far. But for the corporate side, as I mentioned that in June, the corporate governance code will be revised, and it includes that disclose that the TCFD related information. So it means that the corporate governance code and the stewardship code is a twin codes for Japan. So one code is revised and the other code is revised after that. So the stewardship code is just revised last year. So I don't think that it's going to be, again, that it's going to be a regulatory form soon. But, in 2 years after the corporate governance code revised, and it could be happen.
Right. So not yet, but at some point in 2 or 3 years' time, you think?
Yeah, because that finance minister also revealed that their concept of the green international finance center in Tokyo, and this sense includes such a encouragement of that information disclosure, both sides, corporate and asset managers, asset owners, institutional investors. So definitely that it could happen.
Now there's an interesting, thank you. There's an interesting question, really a little in line with something I asked earlier from Takahiro Yamaoka about investors' demand for ESG and corporate governance reform of, in his case, Japanese corporates. Do you have any good case studies or experiences of European corporates to share in the way in which ESG and corporate governance reform has positively driven a sustainability agenda? He says particularly Japanese corporates became facing more pressure from investors seeking return of capital. So is perhaps the sustainability agenda a good protection against shareholders' activism? Maybe, Roger, start with you. What would be your top European examples that Japanese companies could benefit from?
I think that the trend towards transparency is one that UK and Western companies can perhaps show the lead on. I sometimes think this is a bit overdone. People are less complimentary around Japanese disclosure than they might be. But on the whole, I think we are driving, and investors are driving, this kind of a desire to see greater accountability, greater transparency. And it refers across the board. It's not just about climate or sustainability policies. It's across the board in terms of knowing what's going on in a company, having very clear shareholder requirements, having very clear shareholder director payment requirements. And I think that's something that we will carry on driving very hard in the UK. All of it part of how I think UK companies are, and many other Western companies, how they are seeing the needs of the shareholder as they go forward. And that's a drive which, with people like the Investors Forum in particular, is only on the marked increase at the moment.
Okay, thank you. So I did think nuclear power investment might come up in a few questions, and there is, and I said maybe it's not so much a financial question, but there is a financial question that perhaps I might pose to you from Richard Siver. He wants to ask about the difficult area of financing the decommissioning of nuclear power. So really my question is, his question is, how does green finance view this challenge? Or do you see this as essentially a public finance question? Or is there a sense in the financial markets that the cost of decommissioning of nuclear power is being tackled? Perhaps with you.
Well, it is a public finance question. It's also one that we can solve, I believe, and I think it's one that we need. We need the investors to. We need the engineers to come in and look much more closely at. I won't say we've made it a problem, but we haven't let it be solved yet. Would be my summary.
Is this, Mari, is that principally a public finance issue in Japan, the decommissioning issue, or is that something that also financial markets are going to get involved in?
I agree with Sir Roger. It must be a public financing matter. Yeah. Okay. Yes.
Okay, thank you. As far as, well, Dennis Schomko has asked about what are the key drivers that can encourage local manufacturers and utilities in the UK and Japan to invest in green technology? That's quite a good sort of end question to bring this very interesting discussion to a close. What are the key drivers, you think, for encouraging investment in the green technology that we all need? What are the key perhaps policy issues, government policy issues, or kind of discovery issues, development issues that can increase the investment interest in green technology? What do you look for? Perhaps start with you, Mari, and then we'll finish. Give Roger the last word.
Well, before that, actually, I have a question to the Sir Roger about the transition finance. And then now the METI issued the guideline for the transition finance based on the ICMA's transition finance guidance. But I have read that some new articles in the environment finance margin that the transition bond will disappear a couple of years now, and the transition bond is not survive. So I'm just wondering that because the transition, maybe it could be an answer to the Bill's question that the transition finance is very important for the local companies who has many technologies, innovations. But before that, definitely they need finance to transform their business, reducing their carbon emission. So I'm just wondering how that the UK interrupt the transition finance and so forth. So and then I respond to your Bill's question. Actually, so far the Japanese government now have a subsidy, the 2 trillion yen. The Green and Innovation Fund. Now the NEDO opened the 2 programs using that fund for the hydrogen project, and subsidy is important. And then also tax incentives. They also have 1.7 trillion yen for the tax incentive to mobilize that such clean energy innovation for the corporate. And those incentives is very important for the financer to invest or make a loan to our client. But also that carbon pricing, again, it's very important for, it's gonna be a good driver in Japan to change our, or transform our society to the carbon neutrality. Yeah, thank you.
Thank you. Roger, I'll give you the last words on both transition finance that Mari has asked you about, but also about the key drivers.
Well, I think transition finance is by definition transition, but it is where the capital is. And that's why things like Shell's shareholder vote yesterday was actually very important, substantiating what Shell is already trying to do in the whole sustainability area. And yes, we hope it'll be temporary, but I think for some time, the big sources of capital are coming from the big companies, and indeed many of them are very powerful and have the ability to make change in a way that even the largest investors don't do. So I think they're powerful. I hope they go away eventually because they are transition rather than non-transition. In terms of developing the green bond market, you have to have a belief that this is a human issue and that we are seeing a transformation in the way people think about the way they live, and particularly about the way they consume, as I was saying earlier, and about the way that we consume, in particular, energy, cars, there's electricity in cars, the home fuel that we use. We currently have 26 million gas boilers in this country. In Sweden, we have none. I think there's a desire in society to see change. And that, if you like, is one of the most powerful things that we can come across. That, and Mr. Attenborough and others who are persuading us this is the right way to go. I'm not sure who the equivalent of Mr. Attenborough is in Tokyo, Marie, but he is a very powerful figure here for corralling social concern. And I think so that sounds a bit prosaic. Forgive me if it's not very financial, but I think it's tremendously powerful in the way that we are looking forwards, in the way that we're looking at how we lead our lives. So I think that will be a real driver going forwards. In terms of the other key drivers, the one that's most important than anything else that we're doing is the development of new technology. And there's nothing more important than bringing new technology which works commercially, and works to our advantage than what we're trying to do by developing renewable energy markets, all the way from better ways of burning our home, doing our home heating, all the way through cars, the lot. These are the technologies which will make a difference to how we live, how we behave. And the more money we put into that, the more that the scientists, the technologies, governments, please put more money into this area. The more that we do that, the more we will find the solutions which actually are very attractive to people and will make the difference to the way that we are behaving. I can't think of three more obvious things off the top of my head, Bill.
Oh, well, thank you. Those are marvelous ways to sum things up. And I certainly, as an observer, agree that the social attitudes are vital because they bring an answer to the question of will these prices, will these markets last? Any investor, any lender needs to believe that there is a long life to an investment, not just it being a fashionable whim of 2020 or 2021 that's going to disappear. And it's in that social attitude change that is handled the question of whether or not this is really a long-term phenomenon, and which also, of course, shapes the political attitudes. So I absolutely frame that. I do think that David Attenborough may not personally be able to pull this off, but I do think it's a social question that matters in the background of financial markets. So let me close this by thanking both Mari Yoshitaka and Sir Roger Gifford for sharing their time and expertise and enthusiasm with us at the Japan Society on this very important issue. We have learned in the pandemic the power of technology in all senses, and I absolutely also second Roger's hope that and encouragement that investments in the technologies that can help solve some of these problems must be redoubled if we are really going to make serious change. We will continue to discuss and watch these issues at the Japan Society in coming months and years. And I thank you both for your help today, and thank all of the audience for coming and for sending in such an excellent range of questions. Have a very good evening in Tokyo. Have a good afternoon in London, and thank you to you all.
Thank you, Bill. Thank you very much. Nice to see you, Mary.